Okay, so everybody, once again, my name is Justin, Business Development Manager here at Fullerton Markets, bringing to you a special class on the head and shoulder patterns. All right, so some of you guys have been trading for quite a while. Some of you guys have just got into Forex trading, and you're watching this video because you want to learn about some things that can help you in your own personal trading. All right, the head and shoulders pattern. All right, it's something that a lot of people used to trade. Okay, whether or not you're a retail trader or somebody working for a larger trading institution, the head and shoulders pattern is something that people they look out for, they can identify, and then once it shows up, they can actually add it to their trading. All right, or they can actually trade the pattern itself. All right, so this is actually very simple. All right, but don't let that fool you, because just because something is simple does not mean it's not good. Okay, in fact, a lot of the most simple trading setups are actually some of the most powerful out there. Okay, in the end, whatever makes you money, and I'm sure the head and shoulders pattern will be able to help you improve your trading. So without further ado, let's dig deep, let's dig into it. All right, so there are two ways to look at the head and shoulders pattern. All right, first is to use it to identify a bearish pattern or a bullish pattern. All right, for those of you who are not familiar with the term bearish and bullish, all right, here's a fun fact for you to distinguish. All right, imagine a bear. Okay, imagine a bear. Doesn't matter what kind of bear it is, black bear, brown bear, polar bear. All right, if you've ever seen, if you can imagine how a bear attacks. All right, a bear attacks in this way. It will go up and then it will strike down. Okay, strike down. So a bearish pattern means prices will be going down. Okay, that's why, bearish. On the other hand, we have the bullish. All right, if you've ever seen a bull before, all right, you might have seen some bullfights with the matador and everything, or you might have seen some of some videos online. When a bull attacks, all right, it makes use of the horns it has on its head. Correct? So when it attacks, it goes down and then attacks upwards. Okay? That is why when we say bullish, we mean prices will go up. Okay? The bear goes down, the bull goes up. Okay? So a bearish head and shoulders pattern will tell you that prices are moving down, and a bullish head and shoulders pattern will tell you the prices are moving up. Okay, so let's take a look at some of the things that are included. All right, we have the left shoulder, the head, the right shoulder, and something that is known as the neckline. All right, the neckline is that small line in the middle. Okay, now whether or not you're looking for a bearish or a bullish head and shoulder patterns, they will always have the same things: left shoulder, head, right shoulder, and neckline. Okay, so let's keep going. All right. So here it is again in a bit zoomed in, the left shoulder, the head, and the right shoulder. Okay. And this is what I was telling you guys earlier about the neckline. Okay. The neckline, here. It is where the left shoulder, the head, and the right shoulder all sort of line up. Okay. Where you can see prices are more or less playing around this area. All right. In between the left shoulder, the head, the right shoulder, there will be a line that you guys can see. All right, that tells you that this is the neckline for this pattern. All right, and on the right side, we have something known as the breakout. Okay, once the left shoulder, the head, the right shoulder, and the neckline have been established, all right, this is a bearish pattern. So we are looking for prices to break down. All right. That's why on the right shoulder, all right, you can see here that there is an area that breaks below the neckline. Okay. Breaks below the neckline. This is known as the breakout. Okay. This is known as the breakout. And that's very important because this is the start of our actual trading. Okay. Once the head and shoulders pattern is formed, a breakout occurs, we have to wait for something known as the pullback. All right. What do we mean by pullback? Basically, prices are moving back to where they originally were. All right. Pulling back to where they were. As you can see here in this illustration, prices broke down, but then for a small period of time, prices pulled back towards the neckline. Okay. Pulled back towards the neckline. Now that's very important because this is where we actually trade. All right. So since this is a bearish head and shoulders pattern, we are looking to sell or short because we're expecting prices to go down, right? So once a pullback happens, all right, once a pullback happens to the neckline, we want you guys to short, okay, or enter a sell trade. As you can see here, it's written, sell a retest of former support acting as resistance. Friends, okay, let me explain this. Let's break this down real quick. All right, from the right shoulder, moving down towards the neckline, all right? The neckline at that point is known as the support. But the moment that prices broke through and prices are now below the neckline, this old former support is now known as the resistance, okay? And then the level below is known as the support, okay? So now, this is the former support, which is now our acting resistance, all right? So prices broke out, they pulled back, tested the neckline or the former resistance, and this is where we enter our short position, or this is where we sell, okay? This is where we sell. Sell entry, all right. Now, the next question is, well, how do I set up for my stop loss? All right, your stop loss should be just above the right shoulder, okay? Just above the right shoulder, okay? Not on the right shoulder, not below the right shoulder, but just above, all right? Now, you might be wondering, how high above the right shoulder should it be? Up to you guys. It could be perhaps 10 pips, 100 points, 200 points above the stop loss. Up to you guys, all right? Wherever you feel comfortable or whatever your trading experience or your studies have told you, that is a safe stop loss above the right shoulder, okay? Just remember to keep it, all right? Now, here's the thing, guys. If your stop loss is too short, or if your stop loss is below the right shoulder, there is a very small chance for it to get hit, okay? Well, sorry, I'm not going to say very small chance. There is a chance for it to get hit, okay? Now, look at this example, all right? This candle, all right? So we have the body and we have the wick, all right? Even though, let's say it does respect the neckline and prices go down, you could possibly be stopped out by this wick right here. If your stop loss is too close to, if your stop loss is below the right shoulder, all right? If your stop loss was up here above the right shoulder, even if this wick goes even further, it will not hit, okay? It will not hit since it is, it's still far away from this candle, all right? So once again, guys, put your stop loss above the right shoulder, just so you don't get stopped out by this wick, all right? It doesn't feel good, right? When you lose money on the trade just because you put your stop loss in the wrong place, only to see that prices actually do go down, all right? Not only did you not make money, you lost money simply because of a lapse in judgment, right? So remember, stop loss must be above the right shoulder. All right. Now, the next question is, what about my take profit? Well, the take profit is the distance between the head to the neckline. Okay. The entire area from the head to the neckline. All right. If, for example, this is worth 1,000 points, let's say this is 1,000 points or 100 pips, your take profit should be 1,000 pips below. Okay. 1,000 up, 1,000 down, and that is where you will take profit on your sell, all right? Once again, if this is worth 1,000, below should also be worth 1,000. Or if this is 2,000, 2,000, adjust accordingly, okay? And later, I'll show you guys how to actually measure this and how to measure down here so you guys don't get confused. Okay? All right. How high? They must have the same height. Okay? That is your target profit down there. Now, earlier we looked at the bearish head and shoulder patterns. This time we are looking at the bullish head and shoulder patterns. All right? We have the left shoulder, the head, the right shoulder. Okay? And once again, the neckline, as is with the bearish, everything is the same with the bullish head and shoulders pattern, except they are inverted and they have different meanings, okay? But all of the ingredients to form the pattern, they are the same, okay? Just like earlier, we have the neckline, we have the breakout, and of course, you can see we also have the pullback, of which we are gonna enter a trade, which is known as a long position or a buy trade, okay? A long position or a buy trade. Now, let's move on. All right, so yes, your entry should be once prices break above, fall back down to retest our neckline, which is then a support, okay? And that's where we enter the buy trade, we enter the long position, okay? Now, I'll explain this once again, all right? From the right shoulder going up, all right? Prices go here towards the neckline. Since it is above our current price, this is known as the resistance. The moment prices break above and then go back below, up and then below, it is now known as the support, all right? Now, when there is a support, it means that prices could possibly bounce from here, all right, and continue upward. All right, so it is the buy entry. And the same thing with the stop loss. Your stop loss should be just below the right shoulder, all right? Just below the right shoulder. Now, once again, be careful not to set it in the wrong place, because you could get stopped out by a pesky wick. Okay, we don't want that to happen. We want to keep proper stop losses. All right, and I'm sure you guys, have deduced that next would be the take profit. All right, the distance between the head to the neckline is also the distance you should be targeting when you enter the long position. Okay. All right. They have the same height, and this is your target. Okay. So everything's been quite easy for now. We only have a few things to remember, 2 patterns to remember, really. Okay. And after this, I'll be showing you guys some examples, and we'll even do it live. Okay. So my friends, let us begin with a few examples. So here we have the regular candlestick chart. I'm sure if you guys have traded before, you guys might, you guys are familiar with this, okay? So first glance, can you more or less see where the head and shoulders are? The head is very easy because it's the highest, all right? The shoulders, on the other hand, might be a bit tricky, all right? Now try and visualize here on the screen. Done? Okay. Ladies and gentlemen, all right, let's break it down real quick. This, all right, this is the first shoulder, this is the head, and this is the second shoulder, all right? This is the neckline, all right? As you can see, this is the area where the, right, shoulder, right? This is where everything is, this is a level where we can draw a line and see where prices actually bounce off to form the other shoulders, okay? So left shoulder, head, right shoulder, neckline, all right? And here is the breakout. Here is the breakout, yes? Prices go down, prices go up once again to do the retest, all right? Now, what is the next step? And you guys are correct. The next step is to sell. The next step is to short at this position, all right? Now, where is our stop loss? Right here, just above the right shoulder, okay? Now, what about the take profit? We have here the highest point, the head, to the shoulder, and it mirrors our take profit. Okay? Yes, we have the same target. They have the same height. Okay? And that is the sell entry. And as you can see, prices do move down and hit our take profit point. Okay? So this is a completed head and shoulders pattern. Okay? Now that it's completed, we can go ahead and just close the trade and look for perhaps other patterns or just wait around for more patterns to form. All right. Now, friends, here is a very important point I want to get across. All right. You won't see perfect head and shoulders. All right. You won't see, very clear cut, let's say one candle down, up, down. It won't show you perfect points to identify as the head and shoulders. Sometimes they look like this. As you can see, the left shoulder does not look like the right shoulder. It's a bit below, right? But nevertheless, it still counts as a shoulder. Okay, so keep that in mind. You will not find the perfect drawing. You will not find the perfect shape. All right, but it's very important for us to have a keen eye when we identify these points. Okay, let's move on. Here is another. All right, here is another one. Here is another head and shoulders. All right, as you can already tell, this is a bearish pattern, right? This is a bearish pattern, right? Because as you can see here, we have the head and we have the shoulders and we have the neckline. Okay, once again, shoulder, head, shoulder, neckline. All right, neckline. And since this is a bearish pattern, we have the breakout, we have the retest. Okay, so this is where we should be selling. We should be selling. All right, stop loss just above the right shoulder. All right, and our take profit is the same height from the top of the head to the neckline, and that is the same distance we are going to put in for our take profit. Okay, that is our target. Now let's see if this actually continues. And yes, it does. Yes, it does, my friends. All right, so let's go back. As you can see, they are the same. The distance from here to here is also the same distance from here to here. Okay, so we went through a few bearish patterns. Now let's look for a few bullish ones. All right, so this is a bullish head and shoulders pattern. All right, so as you can see here, prices go down, we have formed the shoulder. Prices go even lower, we have formed the head. Prices go down again, we have formed another shoulder. Okay, shoulder, head, shoulder. Okay, price breaks out and is retesting the neckline. Retesting the neckline. Okay, this is the buy entry. All right, this is the buy entry at this level. Our stop loss is just below, right? Our stop loss is just below. Okay, now you might be wondering, why is this the buy entry? Well, in this general level, once prices reverse and enter here, you could enter a buy entry here. It could also be up here. Okay, could also be up here. It could also have been here or here. Okay, but just to illustrate, anywhere in this area, as long as it is retesting this area, then it could be a possible buy entry. Okay, same thing, the height from the head to the neck is also the same height for our target. Okay, now let's see if it actually continues. It does. All right, so as you can see, this is the buy entry, right? But prices actually drop even lower. Even lower. All right, now if your stop loss was somewhere around here, your trade would be closed out, right? But since our stop loss is down here, our stop loss is down here, our trade is alive and well. Okay, our trade is alive and well. All right, so prices do move towards the upside. We take profit and we make some money off of the Forex markets. All right, So yeah, the buy entry, the stop loss, it's quite far, and the target. All right, very successful trade. Now let's do another one. All right. So I'm sure you guys can already see at first glance. All right. At first glance, you already know where the head and shoulders are. Okay. Shoulders, head, shoulders, neckline. Prices break out. They enter a retest. And this is now your buy entry. Okay. If this is your buy entry, where should your stop loss be? Correct. It should be below the right shoulder. Okay. Stop loss. Your take profit is the height from the head to the neck. All right. They are the same height. All right. Now let's see if it actually pulls through. And yes, it does. Okay. So a few things we have to remember. We have to keep our take profits. We have to keep our stop losses. All right. For the take profit, we can have a little leeway and put it just below. All right. If, for example, it is worth 1,000 points, you could put it at 800 or 900 just so we lock in, so that the chances of taking profit at the trade are higher. All right. But your stop loss has to be kept, my friends. Your stop loss should not budge at all. You can move your take profit a bit just to ensure that we close out earlier. All right. But your stop loss has to be on point. Okay. The buy entry, the stop loss, and the target all hit. Okay. So, ladies and gentlemen, that is it for me. My name is Justin, Business Development Manager here at Fullerton Markets. I hope you guys enjoyed our class, and I look forward to seeing you all in our other classes. Thank you all, and goodbye.